5 bills up there. So this is Senate Finance. This is Tuesday, May 19th. This is probably the last day or two we're going to have to get bills out. There are 5 bills out there. I'm going to try and get them all out. I've been asking, would anything bad happen if we didn't get them out, which may be how they get prioritized, but I tend to get through all of them. We have another committee of conference at 4, which is, we are getting squeezed by committees of conference. So we're going to start with 942. This is miscellaneous agricultural subjects. And I believe we have Mindy Hinsdale from the, and Mindy, come on up. Okay. And this is the proposal to exempt horse farms or horse facilities. I think the problems committee is struggling with is things like the budget and the tax bills are set, and we're having a hard time because there is no farm bureau that says, you know, we're the horse association. Trying to estimate, because this would have an impact on the education fund. At its top, it could add a penny to the tax rate. And so we're trying to, and I will say, full disclosure, I grew up in Kentucky. I mucked stalls most of my life. I rode jump seat. In the summers, I went back to Massachusetts, where my grandfather, when he retired, bought and sold Western horses. So I mucked stalls and rode Western horses. I like horse farms, but I am responsible for the education. But so we're going to try, recognize it at some level, it is an agricultural or, yeah, horses eat grass and live in barns like cows, but there's also a lot of smaller operations with, you can keep several horses in a much smaller area than you can cows. So just trying to work that through.
So Chair Cummings and esteemed members of the Senate Committee on Finance, thank you for the time that you're giving me today and for the opportunity to testify. My name is Mindy Hinsdale. I am a 7th generation Vermonter, recently retired after 35 years owning and operating Steeple Ridge Farm, a full operating riding facility in Charlotte, Vermont. It was my life's work. I currently serve as Vice President of the Chittenden County Farm Bureau and Secretary of the Green Mountain Horse Association. Today, I am testifying in my role as co-founder and co-director of the Vermont Equine Industry Advocacy Group. I would also like to introduce Heidi Krantz, who is also co-founder and co-director of the Vermont Equine Industry Advocacy Group. Heidi is here with me today and is also available to answer questions about any information I will be sharing with you. This work is deeply personal to me. I have spent my life in Vermont's horse community, and I know firsthand the labor and sacrifice it takes to keep these farms going. This is how many people support themselves and their families. These farms keep land open, barns active and repaired, animals cared for, and agricultural skills alive across generations. They are part of Vermont's rural identity and economy. But across Vermont law, including current use eligibility, professional equine farms are still too often not recognized as real farms. That creates unfair financial treatment, and it sends the wrong message about the seriousness of these farmers and their importance to our state. The proposal we are asking you to support is focused on working professional horse farms that meet clear and narrow standards. Specifically, we are talking about farms with 25 or more acres, where 50% or more of the farmer's income comes directly from specific equine-related agricultural activities. This is a high bar, and it represents a focused universe of professional agricultural operations. For that reason, we support narrowing this language to remove the provision for farms on less than 25 acres and the $2,000 income threshold. We are grateful to Joint Fiscal Office for the time they took to analyze this issue and prepare the fiscal note. Given the lack of clear data and reporting of the equine industry, that could not have been an easy task. The fiscal note evaluated the broader language. We support narrowing that language to professional equine farms on 25 or more acres and a 50% income standard. And we believe the universe of potentially eligible farms under that narrower scope is much smaller than what the fiscal note reflects. Our organization has maintained a list of approximately 200 professional horse farms in Vermont in the last 10 years. The median size of these farms is 48 acres, with approximately half under the 25-acre threshold for current use. Over the past 8 years, we have conducted 3 surveys. In our most recent survey, we sent surveys to nearly 200 farms and received 62 responses. 22 reported that they made 50% or more of their income from the horse business, have 25 or more acres, and would therefore qualify under the narrowed language. For most of these farms, the land is already enrolled in current use through existing agricultural uses such as hay production, pasture, or other qualifying farm activity. That is why our estimate focuses on the building-related impact. Our ask is not meant to open the door to a large new universe of land, but instead meant to recognize barns, stables, arenas, and related structures used in real equine farming as farm buildings when the farm meets the 25-acre current use standard and the 50% income test. We reviewed tax bills from professional horse farms that could potentially qualify for the farm building exemption. Because tax cards do not always separate farm buildings from other buildings, these figures are estimates. The farms we reviewed showed building-related tax amounts ranging from $3,100 to about $8,300. We also reviewed several farms under $3,000, but did not include those lowered cost examples in the overall average, because including them would have lowered the estimate. We wanted to avoid understating the potential impact. The average building-related tax amount we arrived at was $5,634 per farm. Using that average, the estimated aggregate impact would be approximately $563,000 if 100 farms qualified. Even if all 200 farms on our professional horse farm list qualified, which is highly unlikely, the estimate would be approximately $1.13 million. Because tax cards do not always separate farm buildings from other buildings, these figures are estimates and tend to be on the higher side. JFO cited the 2022 Federal Agriculture Survey, which identified roughly 1,000 Vermont farms with 1 or more horse. We understand why that data point was considered, especially given the lack of clear reporting for the equine industry. However, that figure captures a much broader universe than the professional equine farms this provision is intended to reach. The more relevant figure, in our view, from that survey which is 135 farms with significant economic impact to the state. That is much closer to the group of working equine farms addressed by this narrowed language. We understand that this is a difficult year to make any change that affects the education fund or the general fund. But we hope the committee will view this not only as a cost, but an investment in Vermont, particularly rural Vermont. This is money that will stay in local communities. It will support families, employees, local businesses, and the working land these farms keep in agricultural use. There is a stereotype that anything involving horses must be a luxury or a hobby for wealthy people. But that is not the reality of these farms. These are working agricultural operations run by people who wake at the crack of dawn, feed animals, maintain land and buildings, fix fences, put up hay, manage manure, pay vets and farriers, and try to keep their farms open in a state where that gets harder every year. The Vermonters who run these farms are struggling. I cannot overstate how difficult it has become to keep these operations going. Please pass this critically important provision. Not only will it provide real relief on the ground, it will also send a clear and meaningful message that Vermont lawmakers recognize the contributions these farms make to our state, that their work is valued in Montpelier, and that their elected officials care about their survival. Thank you.
Thank you. Do we have any questions? Those numbers, and given those numbers, have you shared your testimony with Charlotte? If you can email.
Yes, it has been
Okay, you
shared.
do have it, so Joint
Yes.
Fiscal has access to it. Okay, that is a step.
Okay.
And a good one, that does help. Cause, yeah, one good horse could earn $2,000 and be on an acre, an acre of land, so that was getting pretty impressive.
I heard you say that you were supportive of narrowing this down to farm or equine professional operations with 25 acres or more. In your mind, and I don't know enough about current use, would that exempt just the entire parcel, or would that just be current use for acres entirely focused on breeding, serving, and using the horses?
So there are two ways to qualify for current use. One is your land can qualify if you have 27 acres or more, because 2 acres in your homestead is taken out of that and it pays full tax on that. But then if you are a horse farmer and have pasture land and hay land, any combination of that, that is 25 acres or more, you get the current use rate for the land. So you're still paying tax. It's not exempt. It's just, you get that lower value assessed to the land, which you pay the tax
The
on.
whole parcel,
Yes.
minus the 2 acres.
Yeah, and some farms have some part in forestry. So, depending on what their acreage is.
And if you have a farm and you lease your hay land to a cow farmer who pays it, it can be in his current use.
Right. So the other part of current use is that if you to become a farmer, you have to make 50% or more of your gross annual income, household income, from farming. And the language that we're asking to be put in is, up until now, if you were a breeder, you could, but you have to make 50% or more of your income from breeding, which is very difficult to do in the horse industry. Horse farms have to diversify and have multiple forms of income in order to survive. So the added language is boarding, lessons, training, keeping breeding, and the care and management of horses. So this would allow the true professional farms to be able to qualify, the ones that are in the trenches working day in and day out and keeping the land open.
And I just want to make sure I understood that in that example that you used, if there's a riding facility or a stable that's within that 25 acres of current use land, you don't pay on the value of those buildings, you pay the current use value for the land. That's what you pay, right?
So my farm, that was
Yeah.
40 acres. Minus the 2, I paid the current use rate on 38
38
acres. But all my buildings were fully taxed. And they were taxed at a high rate because there's a lot of square footage in those buildings, especially indoor riding arenas. And many indoor riding arenas in our state are taxed at a commercial rate, even though they're on current use land, possibly land trust land.
So
And they
that's what,
could never do anything else with it.
so that's what I'm trying to get at. So
Yeah.
in this construct, if we treated horse equine facilities the same as we do dairy farm,
Mhm.
then that riding barn would be treated the same as a dairy farm.
That's right.
Okay,
That's
that's
right.
what I mean.
And that's where these.
Yeah, it's just a
expense
structure,
and the
sure.
tax and it's,
Yeah.
that's where the money. is.
So which is why
But it'd be
we
the
only
same
looked
premium.
at, yeah, we only looked at the building tax amount on these tax bills that we received. Yes.
Okay. Other questions? Thank you. I think this has given us something a little more solid to work with. I don't know if we'll get through it all this year. There's a couple other major parts of this bill. But we'll try.
Thank you very much.
Okay. Right.
Runs over there anyway.
There you are. Do you have anything for us at this point? I think you came to see me and I said I wasn't ready to draft anything.
Yeah, I don't have anything new for the committee at this point.
Okay. So we'll go on.
I'm here if you have questions about the sales tax part. I could also answer some tax side. of
Okay,
things.
so maybe I need to talk to Ezra. And Ezra, why don't you come on up? And I don't know how long or if you even had a chance to work with these new numbers. But does this give you something to work with?
Ezra Hogan, Joint Fiscal Office. So we haven't had a chance as an office to, I've read this testimony today, this afternoon, so we would need time to digest the information. I think it would depend on the legislative language, so we would need the language to guide our analysis, because if there's no language setting definitions and parameters, then I have to make assumptions, my office has to make assumptions, and so I think if there was some language specifying how the committee would or wouldn't like to
What,
limit the scope, I can work with council, and once I've received language, I can try and have something for the committee.
today or maybe tomorrow? Committee, I think the suggestion is that we take out the $2,000. If you make $2,000 and you have less than 25 acres, which is in the bill, you could be a horse farm. Limit it to 25 horses,
25 acres.
25 acres.
Maybe 20.
And I thought, was it, got no limit on the horses?
Or
Four or more,
So 4 or more, minimum of 25 acres,
minimum of 25 acres.
And the income threshold,
50% of it.
And 50% of your income.
50%,
50.
50.
Yes.
Yeah.
50%.
Which, that, is that consistent with how we use current use for other things?
Yes.
Okay, so 50% is.
We're
for
leaving
longer
out that
than-
long
Make that
threshold,
equitable.
which,
Same treatment.
yeah.
Uh,
We're making this,
If I may.
yeah,
Bradley Showman, Office Legislative Council, I would just recommend that the committee set time to take testimony from tax on just kind of the administrative process that they would have to go through if we make special arrangements for adding agricultural land for equine farming into the statute and what those administrative costs might be.
Oh.
Because it does change, it changes the picture quite a bit potentially for those folks, and we want the committee to have a full picture about what that does.
one of your last acts without what you have the department to show up tomorrow.
Should also disclose, I grew up with horses and ponies, but I don't have fond memories of plugging out the stalls.
I said they were fine. I just said I,
That's why you pay people.
That's right. I have some rather smelly memories. Yes, and manure piles. So anyway, if we could try and go forward on that, no way we're gonna get through all those pricing and codes. They are not real. I'm not even sure whose jurisdiction they're in. We do universal commercial code in here, but I don't know how we're getting through that first half of the ag bill. We can keep looking at this one.
Just a question, who would oppose this bill?
Who opposes?
Mhm.
The adventure talking about equine for the children? No one that we've heard of.
It's a hit to the ed funds, that's cool.
Yeah, I know that, I'm sure that, but I mean, whether or not there's any lobby that says, well, 25 is too many. That it should be cut down the way it is in the bill now, or I don't know where that came from.
The Farm Bureau is supportive. Maggie Lenz and the lobbyist, but Vermont Equine Industry Advocacy Group, the Farm Bureau is supportive. We were just talking upstairs actually about the lack of opposition. I haven't seen it. I can't promise there's not.
It will only come out after the bill gets voted on.
It's
That's how it usually happens.
Did Senate Agriculture take testimony? They did.
They did.
Yes, current use from Jill Remick, from Agency of Ag, from Steve Collier, but there was no lobbying presence on the outside like that was proposed.
The people that don't like it would probably be the smaller ones. You're loud.
If I could speak to that a little bit, I've been,
Well, you to just introduce yourself for the record.
okay, I was introduced
Oh,
earlier.
no, we need you to, it's just the formality in here.
Yep, I'm Heidi Cranston. I'm with the Vermont Equine Industry Advocacy Group and also many years involved with the Vermont Horse Council, which is the only statewide equine organization that this effort started with back in 2015. So we've been working on this.
It's been around.
So it's been around, and the Horse Council was the group that did some of the early surveys on this. We've been speaking with the small farms and the larger farms through that whole time. The small farms don't consider themselves farms. They are people like me. I have 2 horses in the backyard. I'm all for this because we want the horse industry to remain strong in Vermont because it does provide jobs for young people. A lot of the people that we've talked to that have provided testimony in both the House and Senate ag committees are young entrepreneurs who are trying to keep their farms alive. And they're having a hard time because of the taxes that they're paying. And the smaller landowners understand that they don't qualify for current use. They understand the difference between current use and owning land. So there's not been.
I can remember when we added horse breeding.
Right. That was a big move.
That was a big move, and that was some time ago. But yeah, you don't train board or ride cows.
Right.
And so, but this is an industry that involves large animals and open space and grazing.
And it brings in a lot of tourist money. One of the early economic impact studies we did show the significant income from tourism dollars for events like there's a 2-week horse show that happens in Dorset, Vermont. That brings
happen in weeks.
It used to happen in Stowe before that. It's been around a long time, but it brings many hundreds of thousands of dollars into the state. Green Mountain Horse Association in Woodstock is full all summer long, spring, summer, and fall, bringing people into the state. So and Pond Hill Ranch in Castleton every weekend brings hundreds of people in. So it has a broad impact beyond the horses.
I think our issue is just the timing and hitting the end fund this year.
Hopefully this
But
change, this narrowing will help with that.
Sometimes takes a little while to get things through here, but if we could just take a look at within those parameters, and we'll see if the tax department can come talk to us. Yeah, and see if there's anything. So we're going to go on. We have received H 648. Wait,
Chair comments.
yes,
We did bring Kirby in to speak about retail use tax piece.
Still sex exemption?
And
For long-
that has some technicalities that Kirby's expertise might be beneficial.
I'm
Not a priority.
thinking that that is not a priority.
Okay.
I mean,
Okay.
that's something that's going to take days and we don't have to get our heads around with all that. This first half of that bill was all changes to pricing and you have to do the price per unit. And I know we looked a couple of years ago that there was a penalty if the price on the shelf didn't match the price in the cash register. And what we found is some of the big chains, their cash register get updated from national headquarters. They don't set the cash register, but sometimes, especially with the labor shortage, they may miss changing a sign on the shelf. And it just, I know there's been complaints nationally. I haven't heard them locally about these signs that change prices by the minute. You know, you pick it up for one price and it's different when you get to the cash register, but I haven't heard a lot.
Happens all the time in grocery
What?
stores and it's not just conversation, they figure it out.
Yeah. What happened? It said it was for sale.
Yeah.
I missed, yeah. If there's any conniving going, I just don't think that that's something we have to do. But I want to move on to 648 because Maria is here and it's come back. And we have a house amendment. And Pat was around. I don't know. I'm trying. Dancing is on inside cat. Okay, here come the bankers, you know, they're like, the horse people are leaving, the bankers are coming in.
Thanks.
Okay. Okay, Maria, what did they do to our bill?
Maria Royal with Legislative Council. Yep, so I'm about to share my screen. So they concurred with all of your changes and then have essentially two further proposals as amendment. The first one has to do with virtual currency kiosks. You'll remember that you extended the sunset of the moratorium by 1 year. Their proposal is to prohibit them altogether, starting in July. And so the first 19 pages of this 33-page amendment does just that.
It takes that long to
Well,
go to.
it doesn't take that long, but there's all the conforming changes in statute. I will just mention what was left on the books. I get there? Oh,
Because there was one, we got down to the end, we had hit a crossover, I think. We'd hit our deadline. And I felt that if we were gonna end the kiosk, we needed to have time for them to testify.
and they did testify.
And yes, and we just didn't have the time. So it's not because we had any heavy discussion and felt strongly that kiosks were a good thing.
So you'll see there's the prohibition language. A lot of stricken language, obviously, all the disclosure, all the.
Well, that's right, because this was like a 10
Yeah,
page,
that's
what they
why
had
it's so
to
long.
be here. Yeah.
But I'll just mention specific language that the registration of the kiosks expire this July. And actually, whoops, I might have passed it. What I was gonna say is there are provisions in law that concern refunds. Those are left on the books in case there are transactions right up until the expiration,
Okay,
then
yeah.
there needs to be a refund if they didn't comply.
Okay.
And in addition, there's a records retention provision so that they maintain all of their existing records in case there's a
Funds
review.
go on after the.
They can go on, yeah,
Forever.
they,
Okay.
if they're entitled to refund under
Okay,
the old, yeah,
keep the refunds and they have to keep records.
right.
Is there any limitation on how long the retention period lasts?
Yes, there is.
There it says.
Yeah, until at least July 1st, 2031, and the commissioner can establish a later date. If deemed necessary.
Because to date, we haven't heard of any real problems with these two kiosks.
I would ask you about, there's a limited amount of data there.
Yeah, I thought, I mean, I
You can-
thought we had heard that.
There, yeah, I mean, there is more national data. There's
Yeah.
More, right, so, but DFR can speak to that, you know.
Okay.
And a penalty provision if there are any violations.
Yeah.
Keep transacting, it shouldn't.
Still a very large. Section that was brought. In by the industry and then got refined and.
Yeah. I
Put a
think you,
lot.
it was in 2024, when you established the initial moratorium, you had some consumer protections, and then last year you added a lot more consumer protections, extended the sunset. And now, you can hear from the department, the Attorney General's office testified in Congress as well, basically. I don't want to speak for the Attorney General's
Yeah.
office, but you know, that the cons outweigh the pros of having these, you know,
Yeah.
essentially that's a nutshell.
Yeah.
But again, I'm not here to represent it. The other provision though, has to do with what are called merchant cash advances, the type of non-traditional commercial financing. So not from your traditional banks, but
Okay, was this in the bill original?
this was not in the bill originally, and it's new language. It wasn't in a House bill. It's new language, as of a few weeks ago. It was DFR drafted it based on, I believe, some model language that's been adopted in other states. Probably maybe tweaked a little bit for Vermont. But it's, and again, DFR can talk about the policy, but it's a kind of a growing, emerging market in need of enhanced oversight. So the proposal just in general, because of the way they're structured, and we'll go through it in a little bit more detail, but basically a company might give a small business an advance, a cash payment lump sum for a percentage of future revenue. Sales revenue, right? So they agree to, you know, percentage of future sales. Or they actually buy the accounts receivable and collect that money. So that's what factoring, I talked about earlier, sales-based financing. Those are the two primary mechanisms, but because they're considered a purchase of assets and not a traditional loan, they haven't fallen under the licensed lender laws in Vermont. So what this would do is basically say, no, you need to get a lender license. We're requiring you explicitly to get your license. You know, they do the whole background check and make sure you're able to be licensed. What's that?
Factory.
Oh, factoring. Yeah, I know. It's a really old term. I never heard it before. I think there's a Vermont law that's actually
I
on the
think
books
there's
now
a
that
lot
would
more
be
going
Yeah.
on. In the olden days, but.
So we'll just go through quickly. So section 59 actually refers to the penalty provision in the license lender chapter. It basically says that any violations of these commercial financing contracts are subject to similar penalties. All right, so that's essentially what's stated there. And then the actual bulk of the substantive provisions, it's a new section of law. It's contained in section 60 of the bill. So it begins with the definitions, and I think I've explained, although at a very high level, kind of the major terms. You know, commercial financing means sales-based financing, meaning you get a percentage of sales revenue generated. before you actually take over that accounts receivable. So the merchant would accept a small, like a smaller amount of money that they would otherwise get if they collected it themselves, but they get that money immediately. And then the difference is the profit that's made by the lender. Okay, so finance charge is defined very broadly. You'll see in the disclosure section, just to make sure that the merchant, the small business understands all of the related charges. And they're also required to convert that to the APR so that the business knows exactly how much they're paying and compare with other potential loans. It's a part of, I'll just mention, because it's helpful for me to understand. Sometimes the business might not have a sales history. They might not have a high enough credit score. They might need the money faster than a traditional bank can provide it. And that's why these arrangements might make sense for their business. But because of that, there might be opportunities for practices that aren't in the best interests of those businesses. So a lot of this is disclosure requirements and oversight to make sure everything's fair. So the provider is another name for either the lender or somebody who's soliciting on behalf of a lender. The recipient is the business. Talked about sales-based finance. There's definition of what it means to solicit this type of business, similar to other loan solicitation language under the licensed lender law. And then that brings us on page 23 to the actual license requirement. And again, that's required of the person who's providing the financing, that's subdivision 1, as well as anyone who's soliciting this type of business, that's subdivision 2. And then there are exceptions who doesn't need to get a commercial lender license. Some of these are similar to the licensed lender exemptions, state agencies, federal agencies, traditional depository institutions that are rated, they obviously have all of their own consumer protections, a seller of goods or services, so that might be retail sales, financing. Also subdivision 4, it's the commercial financing transactions for purposes of this requirement are capped at $1 million. So anything beyond that is, there's no specific protection. It's meant just to get to kind of the smaller loans, smaller businesses. And also purchase financing that are not primarily for personal, family, or household use. The other exemptions under the licensed lender law do not apply. If there is a loan, a commercial loan that's used for personal or family or household use, what this subdivision 5 basically says is that that will be deemed a loan and governed by applicable provisions of the title, like the usury laws, the 12% interest cap. And that's what's referenced on lines 18 and 19. It's a retail, like a retail installment contract, motor vehicle installment contract. Some of those protections would also apply. So in terms of other consumer protections, the provider is not allowed to automatically debit business's account unless, I believe, there's a specific authorization to do so, like a perfected security interest in that account, and there's first priority. But in general, they can't just take money out of the account. Confessions of judgment are prohibited. This is when some contracts have this language. So if the business defaults on a payment, it would allow the lender to basically freeze bank accounts, CDAS, things that you normally have to go to a court for. This prohibits those entirely. You can't even agree to that in a contract. Choice of law, jurisdiction venue, basically Vermont law controls any actions, whether they're legal proceedings, arbitration proceedings, happen in Vermont. That is what subsection F deals with. And then specific disclosure requirements first related to state-based financing. It's similar to what you've seen in other areas, just what's the total amount of the financing? Any fees deducted or withheld, the actual line charge, again, converted to the HDR. So businesses understand exactly how much they're paying for the credit. And then in terms of coming up for, the term, what it's based on, the projected sales. There are different ways of calculating that. They can use the historical method, which is based on past sales, or they can use a projected, what's called the opt-in method, which is based on what they anticipate the sales to be. So if it's a new product or a new market, maybe they're anticipating maybe more revenue. But there's also, so that's what's described in Roman numeral 1 and Roman numeral 2, those two different methods. The second one, Roman numeral 2, can be a little bit more problematic because your projections might not align with your actual sales data, and the commissioner can step in if it seems like there's too much of a deviation, again, to protect if necessary. So the estimated total repayment amount, estimated term, etc. Again, just the details, just very specific disclosures about when, how they're paid, whether they're fixed payments, whether they're variable. And there's all of the disclosures have to be signed by the recipient. You can't finalize an application until the disclosures have been made and signed. And the commissioner can prescribe the format of the disclosures. And so then line 15, subsection H, basically the whole same list of disclosures with respect to factoring transactions, very similar.
And Representative Marcotte saw me in the hall. It sounded like a simple little.
A lot of pages.
He didn't mention how many pages the simple little.
And then there's a general rulemaking provision, authorization, to the commissioner. To adopt rules relating to the calculation or determination of any metric that's referenced in the disclosures. Related to formatting, how the information is disclosed, enforcement, other administration, interpretation of provisions, of language and statute if necessary. So that's pretty much it for the new law. Then section 60, and I will say this law, you'll see the effective date doesn't take effect till next July 2027. So what section 61 does,
This is almost as long as the original.
well, no, it's renumbering the section numbers. So John 61
okay.
sections, which is tacking on to the end. So, but what section 61 does is it authorizes the commissioner to initiate the rulemaking anytime from July 1st of this year on, but any rules, if they get far enough, wouldn't actually take effect till July 1 next year. For the rules and the law. So that's pretty much it.
Okay. I think I'm gonna ask DFR if you'd like to come up and talk to us about why and.
Sure.
Do the bankers have anything there?
Good.
Oh, they're good, okay. Well, Patrick, if you have anything to contribute, a little bit, okay. So what happened between when this bill was here?
Good afternoon, Eric Ferris, Deputy Commissioner for Banking at DFR. So what happened, DFR did not intend to provide these provisions in the bill, as you saw in the previous iterations. However, Chair Marcotte directly asked us to write both provisions. And so that's what we did. And that's why they're now part of the various amendments.
Is there a problem we're solving? Maybe we
In
need,
terms of which item would you like to talk first?
the whole factory,
The merchant cash advances?
yeah,
Yeah, as you heard from Maria, they're because these are asset-based transactions, they're not subject to our licensed lender statute. So none of the provisions that are the protections that DFR has in place currently allow us to get involved, allow us to, license the entity, allow us to make sure that there are disclosures made, allow us to sort of, regulate the industry. We have gotten a number of complaints from it's mostly from small business people, so I may say individual, but it is really to business, who are saying, look, this is, like, I can't make these payments anymore. This is a really onerous type of financing transaction. We have had a couple of cases where the AG's office also brought some individuals to us, and they're trying to work through, how we can support them. So the way we approached that provision today is we took a look at what some other states have done. I believe we took some provisions from California, New York, and Virginia. And so we felt that the best way to approach it was to treat them similar to our normal commercial lender license. So we've now defined the two types of transactions, the commercial financing contracts, either the factoring side or the sales-based revenue side, and define those so now that they are subject to that licensed lender statute. So that means the entity has to be licensed in Vermont. So our staff, they get an application, they have to meet all of those initial qualifications. DFR will have the ability to say yea or nay, or you can conduct business in Vermont, no, you may not. Then they will be subject to our normal examination powers requirements. So we will take a look at the activities. And more importantly, I think, is the bill would then require the entities to provide disclosures to the borrower, the terms of the transactions. They'll have to calculate an APR, so you can sort of shop and make sure that you understand how much this financing is costing you, because it is financed.
So if it's an unregulated area and interest rates don't seem to be coming down, that especially small businesses, we can get some legitimate and probably some less than legitimate businesses moving in. And it would probably behoove us to have some regulations in place before there's. Okay.
I agree with you, yes.
And this is your proposal. You're doing it.
That's correct. So we did draft this language to sort of try and strike the balance of, like, at least let's require the license, require disclosures, incorporate all of our existing powers, give us that moving authority, just the best regulation in the industry.
Okay. Committee, any questions? Okay, thank you. And Patrick, you have something? Regard to the speed, we are.
Yeah. So Patrick, I'm going to fiscal office. This will be really quick. So for the virtual kiosk ban, there's currently one operator with 2 kiosks in the state. They have a renewal fee that they pay each year. So you won't be collecting that with the ban going forward. And then by bringing these commercial lenders into the fold, they'll be subject to that licensed lender fee going forward. We're talking probably 4 digits in terms of the revenue collected, maybe below 5 digits. But the reason I can't really put a number on it is it's a little opaque as to how many entities are really working in this space. So, bringing them into the fold will give more insight on how many are actually out there. And then just for context, we're talking thousands of dollars in fees. These go into the Financial Institution Supervision Fund, which generates annually around like $4 million, which DFR uses for their regulatory work. So, you just heard from them, and I haven't gotten any impression from them that a few $1,000s is going to change their financing picture for their work. So, but just to give you context on the amount of money already going into that supervisory fund.
Okay, Senator Chip.
Without using names, I just know that this industry is under a great deal of pressure, and there's a lot of shakeups. And I saw one of the largest operators of these just went bankrupt last year, and 2 other states have already banned them. Is the operator in our state the one that's in Chapter 11 bankruptcy protection right now? Do you know?
I don't know the answer. I see the folks in the corner shaking their head.
Tennessee and Indiana banned them this month.
Wisconsin.
No,
The rest you probably see.
Okay, so we are banned, and we are regulating. This
You're
is
talking about crypto.
The crypto.
crypto, we are banned. Yes. And I think when we originally looked at that, we had testimony that nationally there were big problems. So,
And I'll just confirm that the rest of the bill still has no fiscal impact for the state.
okay.
No.
Senator Mattis.
Just a question for DFR. Do we have any issues with those two kiosks in Vermont? I'm just curious, because we put all those parameters just last year. To fast forward a few months later to then say, never mind.
We have not received any complaints of any activities through those machines this year.
Can I say something to that, Madam Chair? So I would just like to invoke AARP's testimony on this. It's the ones we're not hearing from. So if you're conned out of $1,000 because you got something from the IRS and you go do this, a lot of people aren't saying how that they got conned because they're embarrassed. So a lot of these things are used by criminals and con artists to capture money that cannot be redeemed or recalled back. So these things are just an exploitation vehicle for criminals.
It's
So we're not hearing them. We're not hearing them.
I don't see any data that I hear about data a lot, but in this case, it's anecdotal.
No, I was, Emma Schuldeis for CoinFlip. We had one, CoinFlip's the one operator in the state of Vermont. There was one, client that came and we provided a full refund to, because even though it's not in the bill that we worked on, we have a 48-hour hold period that we kind of hold the money before we let it go. And we caught that one person, and that was the one since the bill in action that we, the operator, heard about.
So they didn't lose the money.
okay.
Look at the data, Tom.
No, but the data is hard to quantify because there's this,
They're not registered, so we don't
yeah,
know.
and the folks are embarrassed and so are reporting. No one wants to admit they're being swindled or duped or whatever.
Okay. Committee. We can accept. We can reject. Or we can send back further proposal of amendment. And we'll give you 24 hours to think about it. Or are you ready to vote now?
I'm ready to vote now, and I can call Senator Hardy back.
Senator Hardy is the reporter of this bill.
Yeah, so. I think she should get back here.
She said she'd been meeting another committee.
I don't see a committee conference on this. I mean, it's either we're either gonna concur, so if we don't need to get it out today, I'm just happy to wait and not pull her away from where she's in.
She's just needing someone.
We will get it out here tomorrow, but take a look at it. So I can report it if she's not comfortable. See where it goes. Okay. So that moves us along. I am anticipating that this will be 2-minute vote out tomorrow. In between committees of conference. All right, now we're going on to 757, which is the manufactured homes. And have I got a draft? I have that one on for a pro.
Yeah, it's like sign up.
You want to open the door?
It might help.
That might help if we can hold up. We have an accolade to manufactured homes and limited equity cooperatives.
No.
This was if it got treated, if a mobile home got treated as basically real estate, real property, or was personal, like a bill of sale, or it had to have a deed of transfer. Remember this one? I'm just remembering this one from last Friday. You're next. Does anyone want to both this out at this point.
What number is it?
This is seven, 757. Naturally manufactured homes and limited equity cooperatives.
I was fine with that one.
I don't remember there being any on policy.
It was in your morning computer, right?
So it comes here 50.
Yeah.
We need to work, but it's all-
Yeah.
And tell people to be quiet. Thank you.
5-0, stop.
Yeah, I thought, I mean, I was fine with it.
Treat manufactured homes a little more fairly.
Yeah, exactly. And I've got one right on North Avenue in my district and I would like to support them. So.
No objection that I've heard.
Number.
We're fine with it? Yeah. Cool, let's do it.
Other than your favorite meeting.
I'm just, yeah. This is needs for mobile homes. It has to do with whether or not, and under what circumstances they are treated as personal as opposed to real property.
This is just an equalizer so that they don't pay the 6% sales tax and the same thing they effectively.
They, okay.
I would move favorably H 757 has received to us from Senate Economic Development House of Affairs.
Senator Pittman has moved that we vote favorably on H 757 and relating to manufactured homes and limited equity cooperatives as it was sent to us from the Senate Committee on Housing and Economic Development. Is there further discussion on that? If not, further amendments. Okay, all those in favor say aye. Aye. Opposed say no. I'm seeing that as 601.
For the underlying bill from the US.
That would be fine. Okay, so it should be voting for.
Madam
Okay.
Chair, did you want to do a vote on the bill? I'm sorry, I was on the last bill.
Yeah.
We're going to
We're gonna do it tomorrow.
Okay. I still want to.
It's a large amendment that nobody, and I didn't know if you wanted to have, you're the reporter, I can
I
report.
heard it today.
I should report it since I wasn't in the room because I just had a walkthrough, I assume, from Maria.
Yeah.
Yeah, that's all we
Yeah.
had.
Okay. Okay, but we'll vote it tomorrow.
Yeah.
Okay, I'll take that.
And you
It's only
can-
32 pages.
It's only 34 pages.
Amendment, they're not.
Seriously?
Oh, dead serious.
Oh, wow, what did they do?
I
I know that. No, was there something else? So what?
This, like, it's a.
Think we're.
They.
regulating the lead.
I need to go on it real quick. Bags are happy.
You wanna know what?
Yeah, let me know, sorry.
Yeah,
Are we going bottom
they
dollar?
basically are companies that will loan you money in return for, they will take part of your sales, part of,
So they're regulating those?
and yes,
Okay.
and they are not regulated here. There have been complaints done, and so this was initiated by the House Committee, not DFR. DFR worked it, and this basically says in about 63 sections that you have to get licensed
To do this thing.
to do this.
Okay. And everyone's on board?
Everybody was happy.
Team players? Okay.
Everybody was a team player.
Okay, that's good to know.
No, it only took Marcotte 30 seconds to say, oh, well, we just did this. It turns out to be a huge bill.
Okay, I mean, I can probably report it then, if that's what it is. That- Yeah, that's fine. As long
If
as you-
anyone has any detail, you probably appreciate any of this.
Perfect, I will look at it and talk.
Now we're getting on two more funds, 915, the bottle bill. It is our thing in this one is it will increase the handling fee paid to redemption centers by a penny. They have not had an increase in 7 years or 17. It's a long time. Labor costs have gone up a lot in 17 years. It would be paid by the distributors, but I'm assuming the distributors can pass some of that cost on.
Did you pay by the consumer? No offense, most of that.
Or to the manufacturer.
Yeah, I mean, we did hear testimony that for producer responsibility organizations that that generally the costs are not related to the consumer because beverage consumer pricing is done at the national level, and if Vermont makes a change, they're not going to change the price of like Coke in Vermont because of this, because we're such small.
There's some
potatoes.
trouble with this, every state adopts something.
If
There's some
every state
trouble
thinks,
with it.
but Vermont
Well,
doing it is
I
not.
guarantee that every state has the same kind of revenue problem with labor and other areas that Vermont does.
Right, but not every state has a producer responsibility organization for bottles, so,
Nothing is free.
Right.
Yeah.
Nothing-
Are we doing it right now?
We should get these guys back because,
Well, I've got one upstairs. I don't know, Chittenden and they just left. They should be back. I'm going to give us 5